In the last two videos, I showed you where practices lose money, overhead inefficiency, and the wrong tax structure. Today, we go one level deeper, how to actually read the document that shows you all of this. Every month or quarter, your accountant or bookkeeper sends you a profit and loss statement. Maybe you glance at the bottom line, maybe you scroll through it quickly. Maybe, if we're being honest, you'll close it and tell yourself you'll look at it later. Today, I'm going to fix that. I'm Kanan, a CPA, and in the next few minutes, I'm going to walk you through a dental practice P&L line by line and show you the 4 numbers that actually tell you how your practice is performing and what to do if those numbers are off. You don't need an accounting degree for this. You'll need about 5 minutes and this video. Let's start at the very beginning. A profit and loss statement, also called an income statement, answers exactly one question. Did your practice make money during this time period? It shows you your revenue at the top, your expenses in the middle, and what's left over at the bottom. That's the whole document. Revenue minus expenses equals net income. Everything else, all the line items, all the categories, it's just detail underneath that one equation. Once you understand that frame, the rest of the document stops being intimidating and starts being useful. The top of your P&L shows revenue, but in a dental practice, there are almost always 2 revenue lines, and this is where a lot of dentists get confused. The first line is gross production, which you actually billed for your services. In our example, it's $1,080,000. The second line is adjustments or write-offs, the discounts you've agreed to give insurance companies as part of your PPO contracts. In our example, $80,000 are the adjustments. What's left after subtracting those adjustments is your net collections, the actual cash your practice received. That's $1 million in this case, and that is your real revenue number. Everything else on this document is measured as a percentage of net collections, not your gross production. This distinction alone clears up confusion for almost every dental practice owner I work with. The middle section of your P&L is a list of every expense your practice paid. It can look overwhelming, but here's the thing. 4 categories drive the vast majority of dental practice overhead, and those are the only ones you need to watch closely. Staff payroll is almost always the biggest line, typically running 25 to 30% of collections. Clinical supplies usually run 4 to 7%, lab fees 5 to 8%, and facility costs, rent or mortgage, typically 5 to 10%. In our example practice, those 4 categories together account for about 48% of net collections. Everything else, software, marketing, utilities, insurance, matters, but those 4 are where the meaningful variance usually lives. When your P&L looks wrong, start with these 4 before you go anywhere else. Here's where most dentists read their P&L wrong. Everyone jumps straight to the bottom line, net income, and uses that to judge how the practice is doing. But net income is actually one of the least reliable numbers on this document for benchmarking purposes because it changes based entirely on how you choose to pay yourself. If you take a higher salary, net income goes down. If you take a lower salary, it goes up. Neither one tells you whether the practice is actually running well. The number that actually tells you that is your overhead percentage, total expenses divided by net collections. In our example, $642,000 in overhead divided by $1 million in collections equals 64.2%. That number is objective. It doesn't change based on your compensation decisions, and it's the number you can benchmark against the industry data to see exactly how your practice stacks up against others your size. Now here's how you use those numbers. Once you know your overhead percentage and your category breakdowns, you compare them to industry benchmarks. Healthy dental practice overhead runs somewhere between 55 and 65% of net collections. The best run practices get it closer to 55%. Above 70% is a red flag that something needs attention. For individual categories, staff payroll healthy at 25 to 30%, clinical supplies is healthy at 4 to 7%, lab fees between 5 and 8%, and facility costs between 5 and 10%. Our example practice at 64.2% sits at the upper edge of the healthy range, not a crisis, but not optimal either. The gap between 64% and 58% on $1 million practice is roughly $60,000 a year in additional profit. That's the number that should make you want to look closer at your own P&L. Here's the habit I want you to walk away with. Every month when your P&L arrives, spend 5 minutes, literally 5 minutes, doing this exact review. Step 1, find your net collections and compare to last month. Is the practice growing, flat, or shrinking? Step 2, calculate your overhead percentage with quick division. Is it trending up or down? Step 3, scan your big 4 categories: payroll, supplies, lab, and facility, and flag any that moved more than 1 percentage point from the prior month. Step 4, note anything that looks unusual and write it down so you can investigate before the next month's review. Step 5, compare the whole thing to the same month last year to account for seasonal patterns. A slow January is normal. Slow January that's slower than last January is a question worth asking. That's it. 5 minutes, 5 steps every month. The single habit will tell you more about the health of your practice than anything else you can do. I want to leave you with 3 specific questions to ask your accountant after you watch this, and the answers will tell you a lot. First, can you format my P&L to show each line as a percentage of net collections, not just a dollar amount? Dollar amounts alone don't tell you anything without context. Second, how does my overhead percentage compare to similar practices my size? If your accountant has access to dental industry benchmark data and uses it, great. If they look at you blankly, that tells you something. Third, which category should we focus on first to move the needle? A good financial advisor has a specific answer. A generalist has a vague one. I'm not saying you need to switch accountants. I'm saying those 3 questions will help you evaluate whether the financial guidance you're currently getting is as specific and useful as it could be. Before you go, I have one question for you. Do you currently review your P&L every month? Drop a comment below. Yes, no, or even no judgment here. What is a P&L? I read every comment and will respond. Let me know what you would like me to cover next. If today's video was useful, subscribe so you don't miss the next one. I put out a new one monthly specifically for dental practice owners. And if you want me to look at your actual P&L and run the benchmark comparison we talked about today, the offer stands. Send me an email. Appreciate your time. I'm Conan. Don't forget to drop that comment.